Hey Jason, this is Ryan with TrendLizard.com. Thanks for signing up at TrendLizard, becoming part of our community. I think you're going to like it here. I've enjoyed our back and forth on the emails, and thanks for sending me the three tickers that you wanted me to take a look at. I'm going to do that for you here in this video. We're going to take a look at NIO, the Chinese EV company. We're going to take a look at pins for Pinterest and TGT, Target. Everybody knows Target. Those are the three that we will be taking a look at for you. One thing seems clear is that you are a big fan of stocks that have had huge run-ups in 2020, because all three of these guys have. So we're going to take a look and see if they are going to continue those run-ups or if they're getting closer to an end to those moves. So we'll start with NIO. This is one that I have analyzed before on my YouTube channel. It was incepted back in 2018, chopped around, actually moved lower for quite a bit until late 2019, and then it's kind of started a little bit to the upside in late 2019, pulled back in early 2020, and then off of the March 2020 low, it has been an absolute stud, which is why it's been a meme stock and just gone nuts and been all over the news and other places. So this is my best take. It's not always easy to get a great feel for a stock that just goes through the roof like this. That doesn't have a lot of pullbacks. I mean, basically, during its entire lifespan here, since that low in late 2019, it's never really given us a larger pullback, which makes it more difficult to analyze with confidence. It is giving us a larger pullback now, so that kind of helps, but it is harder to be confident in a young stock that doesn't have a ton of pullbacks. Nevertheless, this is the labeling that we used last time, and it continues to fit. Let's go ahead and zoom in and take a look at some of the more proximate price action here. This is that advance off that late 2019 low. Like I said, a little bit of a slower start. Got a pullback in late 2020, or excuse me, early 2020, and then has gone to the moon since then. And again, this is my best take on how to label this as a trendy 5-wave move, because very clearly it is a trendy 5-wave move. It's just a matter of where we are in that trendy 5-wave advance. And according to this labeling, I believe there is work to be done before a high is found. It looks like off of March's low, we started a 3rd-wave advance that is still in play and has work to do. So we are still bullish on NIO. Let's continue to zoom in and take a closer look at more proximate action once again. So this is the advance off the 2020 low. The current action that we're getting here appears to be a 4th wave. It appears to be the 4th wave of the up move that started in July, this being the 1st wave, 2nd wave pullback, a large 3rd wave advance off of September's low into that November high, and since then it's been back and forth, very volatile, very indecisive. It's currently sitting near the low. The good thing is this action off the high that happened in November 9th, that happened on November 9th, looks like a counter trend move, which is a bullish thing. It keeps this guy pointing higher overall by all objective measures, so that is a bullish thing. Again, it appears to be a 4th wave pullback that is going to give way to higher prices as it progresses. Let's go ahead and zoom in a little bit more here. This is the advance just focused in on September's low. And again, it looks like a completed 5-wave move. Basically, this was a 3rd wave on a smaller time frame, giving way to that larger 4th wave pullback. This is it. Again, the good thing about this action here that we've seen is that it does look like counter trend price movement. Let's zoom in on it. This is the pullback off that late November low, and the first down leg, as you can see here, despite being very sharp, does look like a 3-wave move. So the question is it over? Has the uptrend resumed? Will it continue directly higher off of December's low, or will it continue to trade sideways in a counter trend move? If I was a betting man, it seems like it's poised to give us a larger counter trend pullback. Of course, that's just based on 20 years of watching the Elliott wave pattern play out. That's not how things have always played out in 2020. A lot of times things have just found a way to continue higher regardless of the setup. So you have to be careful. I think a move above 50 at any point in time is a good bullish indication that this guy is going to continue higher, and that this is in fact a counter trend pullback over November's high. In that case, that's just more fodder for the bullish case, and you can remain bullish there. If it moves much lower off of what's happened off of this week's high, it's going to indicate that this counter trend pullback is not yet over. So you'd have to kind of take a step back and expect a larger pullback into this yellow support area, which resides from around 31 up to about 41 or so. So you'd have to expect a larger move down into this area if it does anything other than turn higher right away. So we're bullish on it. In my estimation, it's probably in a larger counter trend pullback, a larger near-term counter trend pullback off of this high in late November. So we are on guard. But overall, I think you have to remain bullish on NIO and think that it's going to continue higher once this fourth wave pullback completes and should head to new highs from there. So that one is bullish. Again, it's pretty difficult to label just based on how sharp it's been and how new it is. We don't have a lot to look at as a reference. So from there, let's go ahead and take a look at Pinterest. Here is that chart there. It was incepted back in 2019. We seem to see this a lot, but it chops around, heads lower, finds a low in March, and then has gone ballistic to the upside, testing 10 at March's low, and is now trading at 71 from there, and it's basically right at its all-time high since then. Huge gain, 750% return in 2020, so it's absolutely massive. It's hard to be super confident that it's just going to continue directly higher from here. A lot of people seem to think that's how the market works if they're new to the market in 2020. It's really not. Normally the market kind of ebbs and flows, but it's been flowing, and that's about it in 2020. It still looks bullish. Everything about this chart looks bullish. You see the pullback off the 2019 high was a counter trend three-wave move off of that low that happened in March. It's clearly a trendy move, but it doesn't look like a complete trendy move. So we have a first wave up into the late April low, a second wave pullback, and then it appears to be in a third wave advance off of that May low that is still not complete. Once it does complete, we'll get a fourth wave pullback and then a fifth wave up. So there still looks to be promise on Pinterest, but in the near term, it looks like it could be near moving in on a high, and I'll show you why as we zoom in. This focus is just on that advance off of March's low. Again, you have that first, second wave pullback, and then a large third wave advance, basically an unadulterated climb, huge, just a massive up move. It could, again, be nearing the end of this third wave advance, at which point it's going to give us a larger pullback, and that's nothing to scoff at. If you look at that second wave pullback, it was fairly quick just because this market has had no interest in pulling back for nearly this entire year. But still, you look at it, it went from about 2250 nearly all the way down to 15, so that's a sizable move. It looks small in the context now, but if you're losing 30 to 40% of your value that quickly, it's pretty scary. So you need to be cognizant that a larger pullback similar to something like this could be looming fairly soon. But overall, it looks bullish. We want to see it form a 5-wave advance before it's over, and it hasn't yet. So on a longer time frame, it looks like it's going to continue higher, but you have to be on guard for a larger pullback. This zooms in on the most recent action here. Basically, the advance off of the late November low, if I step back out here, looks to be the fifth wave of this advance, this third wave advance. And again, when that completes, you're going to get that larger fourth wave pullback. So just be aware of that. So far, there's no sign of a high to this fifth wave advance. We've had some choppy action similar to what the market's given us over the past few weeks. It might be a running counter trend move. Hard to say for sure. What we do know is that a move below 60 at any point would be an indication that that larger pullback has begun. Really, any notable weakness that pops up should be a warning that a larger pullback is coming. Again, that fourth wave pullback that we would be looking for with a move below 60 indicating that that's begun. You can expect higher prices against 60, but it does look like it's getting later in the game for that advance. And a fourth wave pullback looks fairly certain in the near future. So there is Pinterest. Let's move on to Target, TGT. This is a great one. This is a beautiful guy. It's one that I've traded several times in the past. It sports very clean Elliott wave patterns, which is why I like it. It was incepted back in 1983. Off of the 87 low, it's given us a beautiful 1, 2, 3, 4, 5 wave advance. It's hard to tell on this time frame, but this was a really big pullback in 2007 through 2009. The bottom of this yellow support area means that it retraced 61.8% of this advance. And that may not seem obvious just because this is on a logarithmic scale, but it's a big pullback. This was a very large correction, which is why we consider it a correction of this entire 5-wave advance. Since then, off the 2009 low, it's begun another 5-wave advance. It gave us a first wave up into the 2015 high, a second wave pullback. It's currently in the third wave advance. So if you look at this move here, gives you kind of a basis point. You had a first, a second, and then a third. So if we're getting closer to the end of the third wave, it might put us somewhere around here if it's a similar progression. So in that respect, we need to be on our toes because it might be nearing a larger counter trend pullback, but overall it continues to look bullish. So let's go ahead and zoom in and look at the action off the 2009 low. This is it. Again, everything subdivides so beautifully. Everything looks very clearly and very trendy. You can see each up leg, each trendy up leg is a clear 5-wave move. But here we have the first, second, third, fourth, and fifth waves of that first wave, a second wave pullback, and then we did it again, a first, second, third, fourth, and again it's in that fifth wave. So it looks like it's nearing a high to the 5-wave advance that began in 2017. When this up leg completes, you're going to get a larger pullback. You look at this pullback, it lasted multiple years. It went basically from, let's say, like 72 down to 40 something. So it was a big pullback. This is substantial. It's not the type of thing you're going to want to sit through. So when you have this move completing here, you're putting yourself in a spot for a larger pullback. That's not what I'm looking to buy. I'm more interested in buying something closer to the beginning of a 5-wave move, not towards the end, because when a 5-wave move completes, like this one did off the 2009 low, you get a counter trend pullback. We're getting a 5-wave advance to the upside. It looks like it's moving in on a counter trend pullback. So we have to be careful in that respect, that we're getting closer to a high. So let's go ahead and zoom in and look at this advance off the 2017 low. Now understand, this isn't an opinion that I have. This is the most obvious way to label this chart. If you're looking at the advance off the 2017 low, and if we step back here, it's an important low. You just pulled back for 2 years. So this is obviously an important low. So off of that low, the very obvious thing that's happened here is a 5-wave advance. And then if you zoom in and look at just at the 2020 action, again, it looks like a 5-wave advance that's nearing a high. So you have to be careful about this. You're trying to buy things as they're pulling back, or once they're completing larger pullbacks. You're trying to get in around here. You're trying to get in around here. Trying to get in around here. You're not trying to buy near the end of a 5-wave move. That's it's aggressive. I mean, possibly you get an extended 5th wave advance that makes it all worth your while. But generally speaking, when a 5-wave move completes, that means a high is coming. That's not when we're trying to buy. We're trying to buy closer to lows. So keep that in mind with some of the stocks you're sending me. It does, I'm taking a look at all 3 of these and thinking, man, these guys have run so much already. Target, which is a bricks and mortar old school company at this point, has doubled in value off the 2020 low. It's hard to imagine that there's a ton left in the tank before it gives us a larger counter trend pullback. So be careful with that. For me, I'm trying to buy things as they're starting first or third waves, not as they get closer to a 5th wave advance. That said, here's a look at the advance in 2020. Again, it looks like it's a 5-wave move that's in the 5th wave now. So many things look that way. That's what makes me a little bit nervous. I'm bullish on these things, and I'm going to continue to own them and all that, but I'm not entering any new positions on a trade like this. If I still own it, I'm holding it. I'm just not buying any new positions on it. That said, a move above 177 from here confirms that wave 5 is not yet complete. On the other side of it, a move below 161 at any point says that it is complete and that larger counter trend pullback has begun. So you got to be careful when that happens. It could spark a correction of the entire advance off the 2017 low, which is going to be substantial. It's going to point substantially lower. Let me do the math for you real quick. If we look at our Fibonacci retracements of this move, it points down to basically 97 to 130 from here. So that's a big move. Obviously, you're not wanting to own as a pullback of that size happens. So that's the part to be careful. Again, higher prices are possible, and it may continue to extend like so many things have. But be careful because it looks like it's getting closer to the high of a 5-wave advance. If it moves above 177 again, a high is not yet in, and you might get an extended 5th wave here. But any sign of notable weakness or a move below 161 tells you that a more important high is in, and you need to get out of the way. So, Jason, I hope that's helpful. Let me know if you have any questions about this. You know my email. Have a wonderful rest of your weekend, and I'll talk to you again very soon. Take care.